Welcome back. We will continue with our deep dive of the book, Trading in the Zone by Mark Douglas.
It's always great to be back.
Last time we really dug into those 5 fundamental truths of the market that Douglas lays out. I found myself thinking about them all week.
Yeah, it's not light reading, is it?
No.
But that's what makes it so valuable. Understanding these truths isn't just some abstract theory. It's the foundation for building a solid trading mindset, one that can actually lead to consistent success.
Exactly. And I think for a lot of us, that's the holy grail, right? Consistency. But it's more about what's going on between our ears than what's happening on the charts. So today, I'm really excited to dive into that mental side of trading. The part where our beliefs and fears can either make us or break us.
Yeah, you've hit the nail on the head. Douglas talks about this fascinating paradox in trading. We spend all this time looking for patterns and trying to find some consistency. But the reality is every moment in the market is unique.
Okay, help me out here. How can something be both a pattern and unique? It seems a little contradictory, doesn't it?
It does, and that's what makes it such a tricky concept to grasp. Think of it this way. Let's say you're a trend trader and you notice a pattern of higher highs and higher lows. You might think, aha, an uptrend. I know what to do here. But what you might be missing is the context. What was the market sentiment leading into that pattern? What were the economic indicators saying? What were other traders thinking? And doing all these factors create a unique fingerprint for that specific moment, even if it looks superficially similar to past trends.
So even if I see a pattern that's worked for me in the past, there's no guarantee it's going to play out the same way this time.
Exactly. And this is where our beliefs can really trip us up. Douglas argues that we often view market information through a lens of our past experiences, and that can create fear and all sorts of negative emotions. He uses a really powerful analogy to explain this. Imagine a young boy who has a bad experience with a dog. From that moment on, he sees every dog as a potential threat, even if it's wagging its tail and trying to be friendly.
So it's not the dog itself that's scary. It's the boy's perception of dogs based on one isolated incident.
Precisely. And it's the same in trading. The market itself is neutral. It's our beliefs, memories, and assumptions that charge it with emotion. We might see a particular candlestick pattern, and our minds immediately flash back to a time when we lost money on a similar setup. Suddenly we're filled with fear and doubt, even if the current market conditions are completely different.
This is making me think about my own trading. How many times has I hesitated to take a trade because of a past loss, even when all the signals were telling me to go for it?
You're not alone. It's a common experience for traders. We let our past experiences dictate our actions in the present, and that can lead to missed opportunities and inconsistent results.
So how do we break free from this cycle? How do we learn to see the market with fresh eyes, without all that emotional baggage weighing us down?
That's where Douglas's concept of a carefree trading mindset comes in. He describes it as a state of confidence, but without euphoria, free from fear, hesitation, or compulsion. Imagine being able to execute your trading plan with a sense of calm and detachment, knowing that you've done your homework and you're comfortable with the risk.
Carefree trading, it definitely has a nice ring to it, but how do we actually get there? It's easy to say, don't be afraid. But fear is a pretty powerful emotion.
You're absolutely right. Overcoming fear isn't about suppressing it. It's about understanding its root cause and then reframing our perspective. And that's where those 5 fundamental truths come in. Each one is like a piece of the puzzle that helps us build a more objective and resilient mindset.
Okay, so let's revisit those truths and see how they can help us cultivate this carefree approach. First up, anything can happen. What does that mean for us as traders?
It means accepting the inherent uncertainty of the market, no matter how much analysis we do, how many indicators we use, or how refined our strategies are. There will always be factors. We can't predict a major news event, a rogue algorithm, a simple tweet. Any of these things can shift the market in an instant.
So even with the perfect strategy and flawless execution, we can still have losing trades. It's just part of the game.
Precisely accepting this truth allows us to detach from the need to be right all the time, to let go of the illusion of control that many traders crave. We can't control the market, but we can control our response to it.
And this leads us to the second truth. You don't need to know what's going to happen next to make money. I've always struggled with this one. My brain is constantly trying to predict the future to figure out which way the market is going to move next.
I think that's a very human impulse. We crave certainty, especially when there's money on the line. But Douglas is telling us to embrace the probabilistic nature of trading. Instead of trying to predict the future with certainty, we should focus on understanding and managing probabilities.
So instead of asking myself, will this stock go up or down, I should be asking, what's the probability of it going up based on my analysis and the current market conditions?
Exactly. We can have an edge, a higher probability of winning, but we also have to accept the random distribution of wins and losses. It's like flipping a coin. Even if the coin is slightly weighted in our favor, we're not going to get heads every time.
So even with a winning strategy, I'm going to have losing trades. It's inevitable.
It is, and that understanding can be incredibly liberating. It allows us to eliminate the emotional attachment to individual trades instead of getting caught up in the euphoria of a win or the despair of a loss. We can focus on the bigger picture, the long-term performance of our system.
This is starting to make a lot of sense, but I'm still trying to wrap my head around how this all ties back to the idea of a carefree mindset.
Let's think about it this way. When you're not afraid of losses, you're not constantly fighting against the market. You're not second-guessing yourself or trying to force trades that don't fit your criteria. You can simply flow with the market, taking the trades your system identifies and accepting the outcome, whatever it may be.
It almost sounds effortless.
That's the ideal, isn't it? To trade with a sense of ease and detachment. But it takes work to get there. It takes a deep understanding of these fundamental truths and a willingness to challenge our own deeply held beliefs about the market.
Which brings us to the third truth. The random distribution of wins and losses. If we really internalize this, can we finally let go of that need to be right on every single trade?
We can, because we start to see that losses aren't a reflection of our skill or intelligence. They're simply a statistical inevitability.
It's like instead of dreading losses, we can actually start to anticipate them as a natural part of the process.
Yes, precisely. We know they're coming. We've accepted that. So when they do happen, we don't get thrown off course.
Which frees us up to focus on the next opportunity.
Right. And that shift in perspective can be profoundly powerful. We're no longer letting fear dictate our actions. We're approaching the market with a sense of calm and objectivity.
Okay, this is really starting to click for me, but I have a feeling this is just the tip of the iceberg. There's so much more to unpack here, and I'm eager to dive even deeper.
I agree. We've only just scratched the surface of how these truths can impact our trading, but I think this is a good place to pause for now. Let's give our listeners some time to digest this first layer of insights.
Sounds good to me. We'll pick up this conversation in our next episode. See you then. So last time we were talking about accepting that losses are just part of the game, even with a winning strategy. It's a tough pill to swallow, but it's key to achieving that carefree mindset Douglas talks about.
Absolutely. When you can truly internalize that losses are inevitable, you stop fearing them. And when you stop fearing them, you can start thinking clearly and making rational decisions based on your analysis and your edge, not on your emotions.
You mentioned edge. That brings us to the fourth fundamental truth. Edges are probabilities, not guarantees. I think this is where a lot of traders get tripped up, especially new traders. We're all looking for that holy grail system that will make us rich quick. But that's just not realistic, is it?
It's not, and that's the danger of focusing too much on the outcome of individual trades. You might get lucky and string together a few winners, but eventually the random distribution of wins and losses will catch up with you. Instead of chasing guarantees, we need to focus on developing and refining our edges, understanding that they give us a statistical advantage over time.
Can you give us a concrete example of what an edge might look like in practice?
Sure. Let's say you're a swing trader and you've noticed that a particular stock tends to pull back to its 20-day moving average before resuming its upward trend. You've backtested this strategy and found that it has a 60% win rate. That's your edge.
So 6 out of 10 times this setup is likely to produce a winning trade.
Right, but it's crucial to remember that those are just probabilities, not guarantees. You might get 5 losers in a row, even with a 60% win rate. That's where the acceptance of randomness comes in.
It's that coin flip analogy again.
Exactly. But here's the thing about edges. They're not static. They evolve with the market as conditions change. We need to adapt our strategies and constantly be on the lookout for new edges. And Douglas warns against falling into the trap of seeking external validation for our edges, constantly looking for confirmation from gurus or indicators.
Because that can lead to second-guessing and ultimately inconsistent results.
Right. We start doubting ourselves, making emotional decisions instead of trusting our system and our analysis. That's why it's so important to define our edges, clearly backtest them thoroughly, and then have the discipline to stick to them, even when the market throws us a curveball.
So we've accepted that anything can happen. We've embraced the probabilistic nature of trading, and we've defined our edges. Where do we go from here?
This is where it gets really interesting, though. Now we need to address the final fundamental truth. Every moment in the market is unique. And this one, I think, is perhaps the most challenging to truly internalize. Our brains are wired to see patterns, to make connections, and to try to predict the future based on past experiences. But as Douglas points out, the market doesn't always conform to our expectations.
So even if I've seen a particular setup play out successfully a dozen times in the past, there's no guarantee it will do so again.
Exactly, because each moment in the market is influenced by a unique confluence of factors: economic data, news events, global sentiment, the actions of millions of traders around the world, all interacting in complex and unpredictable ways, like a constantly evolving puzzle. And to navigate it successfully, we need to be fully present in the moment, receptive to what the market is telling us right now, without letting our past experiences cloud our judgment.
This is reminding me of something you said earlier about viewing the market through a lens of our past experiences. How do we break free from that and start seeing each moment with fresh eyes?
It's a process of awareness and conscious effort. It's about catching ourselves when we start making those automatic associations, when we let fear or greed dictate our decisions. It's about reminding ourselves that the past is gone, the future is uncertain, and all we have is the present moment.
And in that present moment, anything is possible.
Exactly. There's a sense of freedom in that when you say letting go of the need to control everything, to predict the future, to be right all the time. That's where we start to tap into that carefree state of mind that Douglas describes.
It sounds incredibly liberating. But I have to admit, it also sounds a little bit elusive. How do we actually cultivate this ability to be fully present in the market, to see each moment as unique and full of potential?
That's the million-dollar question, isn't it? And it's something we'll be exploring in more depth in our next episode. But for now, I think the key takeaway is this. The journey to carefree trading starts with accepting the 5 fundamental truths, embracing the uncertainty of the market, and understanding that our beliefs and perceptions can either help us or hinder us. It's about letting go of the need to control the uncontrollable and focusing on what we can control, our own thoughts, emotions, and actions.
So how can we start putting these ideas into practice? What are some concrete steps we can take today to start moving towards that carefree state of mind?
That's a great question, and it's one that deserves its own dedicated discussion.
So how can we start putting these ideas into practice? What are some concrete steps we can take today to start moving towards that carefree state of mind?
Douglas suggests starting by taking a deep dive into our own belief systems, shining a light on those deeply ingrained thought patterns that might be holding us back without us even realizing it.
We talked earlier about how our past experiences can color our perception of the market.
Right.
It's like we're wearing these tinted glasses that distort what we see.
Precisely. So the first step is to become aware of those glasses, to identify the specific beliefs that are driving our trading decisions. Ask yourself, am I constantly second-guessing myself? Am I afraid to take losses even when my stop loss is hit? Am I chasing after every trade even if it doesn't fit my criteria? These are all red flags that there might be some limiting beliefs lurking beneath the surface.
Okay, let's say I've identified a limiting belief, like I always lose money when the market gaps up. What do I do with that? How do I actually change it?
It's not a quick fix, that's for sure. Beliefs, especially about something as emotionally charged as trading, can be deeply rooted. But Douglas outlines a powerful process of questioning and reframing. First, we need to challenge the validity of that belief.
So in this example, I'd ask myself, is it actually true that I always lose money when the market gaps up? Or is that just a perception based on a few bad experiences?
Exactly. Put on your detective hat and start gathering evidence. Look at your trading journal, analyze your past trades objectively. Is there really a statistically significant correlation between market gaps and your losses? Or is this belief based on a handful of emotionally charged memories that are distorting your perception?
More often than not, I bet it's the latter. We tend to remember the painful losses more vividly than the wins, don't we?
Absolutely. Our brains are wired that way. But once we start to poke holes in those limiting beliefs, we can begin the process of reframing them, creating new, more empowering beliefs that support our trading goals.
So instead of I always lose money when the market gaps up, I could reframe it as market gaps can create unique volatility that sometimes leads to losses, but I have a risk management plan in place to protect my capital, and I can also use gaps to identify potential opportunities.
There you go. You've taken a fear-based belief and transformed it into a statement that acknowledges the reality of risk while also emphasizing your ability to manage that risk and even leverage it to your advantage.
It's like taking off those tinted glasses and finally seeing the market with clarity.
That's a great way to put it. And this process of identifying, questioning, and reframing beliefs is something you can apply to any area of your trading where you feel stuck or limited. The key is to be honest with yourself about what you truly believe and to be willing to challenge those beliefs, even if it feels uncomfortable at first.
This is all starting to connect back to that idea of the zone, that state of flow where we're trading with a sense of ease and confidence, isn't it? If we're no longer battling our own inner demons, we can actually start to see the market clearly and make rational decisions based on our analysis and our edge.
You're exactly right. When we're free from fear and doubt, we can tap into a level of intuition and responsiveness that was previously inaccessible. It's like we're finally able to get out of our own way and let our skills and experience take over.
It's almost like a form of meditation, isn't it? This constant practice of observing our thoughts, questioning our beliefs, and gently guiding our minds back to the present moment.
I think there's a lot of truth to that. Trading at its core is a mental game, and like any skill, it takes practice and discipline to master our minds, but the rewards are well worth the effort. Imagine being able to approach the market each day with a sense of calm focus, knowing that you've done the inner work to overcome your limiting beliefs and that you're equipped to handle whatever challenges come your way.
That's the dream, isn't it? To trade with that carefree confidence, to truly be in the zone. I'm starting to realize that it's not some mythical state reserved for a select few, but a skill that anyone can develop with the right tools and mindset.
That's the beauty of Douglas's work. He demystifies the mental game of trading and gives us a practical roadmap for achieving lasting success.
Well, I think we've covered a lot of ground today. We've gone deep into the mental side of trading, exploring the role of beliefs, and learned how to create a more carefree trading mindset. Any final thoughts before we wrap up?
Just this, remember that trading is ultimately a journey of self-discovery. It's about understanding not just the market, but ourselves. And as we learn to master our own minds, we unlock a level of potential that extends far beyond the realm of trading.
Beautifully said. It's about becoming the best version of ourselves, both in and out of the market.
Exactly. And that's a journey worth taking.
This deep dive into trading in the zone has been incredibly insightful. I encourage all our listeners to pick up the book and explore these concepts further. It's a true game changer for anyone who wants to achieve consistent success in the market. Until next time, happy trading.